All right, traders, recording is officially underway for the weekly outlook. It is time to talk about stocks, forex, cryptos, the week of March 15th through the 19th. So just to get it out there, here's what happened last week. Monday felt really bad. Went to a little emergency clinic. Thought I had strep throat. Because of COVID protocol, I had to get tested for COVID. COVID came back negative. Strep came back negative, and then COVID came back positive. Yeah, I don't have COVID. I went back to emergency room on Tuesday because I didn't feel any better. They didn't treat any symptoms. So I went to another hospital Tuesday, tested for COVID twice, negative, so I don't have COVID. Then they could finally treat the symptoms. But the worst part was it was 24 hours into symptoms that were already getting worse. And so, long story short, I thought I had tonsillitis on Tuesday. Turned out to be like a viral pharyngitis. The left side of my throat was swollen to the point where it was almost like 85 to 90% swollen. Like it was really difficult to swallow. I could barely talk. That was last week. So ended up getting some steroids, ended up getting some anti-inflammatory IV, and ended up getting put on antibiotics finally on Friday. But it took, I think, 3 COVID negative tests, which was just protocol, which was ridiculous. 2 trips to the ER, and a lot of other crap. But here I am. So we're getting back there. Lots of liquids, lots of salt water, and all good. So I wouldn't say I'm 100%, but certainly this is a huge improvement, and happy to be with everybody today and this week. So we'll ease back into it, but we got a lot of stuff to talk about today. Okay, so nice to see you, David. Nice to see you, Donna. Yep, thanks, Jordan. Okay, let's go ahead and dive into the charts here. We're going to take a look at stocks, forex, cryptos. It's going to be a busy week. Last week, the markets were just cooking to the upside. We had the stock market last week up. Dow Jones is outperforming everything. Dow Jones up 4% last week. S&P up 2.75% last week. Actually, 2 2/3 last week. 2.64%. Nasdaq up 3%. Bitcoin ended up crossing 60K for the weekend. Pulled back about 10%. There's some news going on with India about banning cryptos altogether. Bitcoin. So there was, I think it hit $61,000 over Saturday, Sunday. Had some chart alarms going off, and then we saw a big drop in Bitcoin, where it's currently sitting in the high 50s. So pretty exciting stuff. More volatility ahead. Okay. All right. So we're going to get into the charts. Understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Anything I'm talking about for these videos on Mondays and Fridays, for these educational videos, YouTube videos, keep it seriously simple. Trading indicators, whatever it is, educational purposes only. Okay, if you're following me out there on social media, best place to find me is my YouTube channel, youtube.com/Chris Pulver. We're streaming this on multiple platforms, on Facebook, along with Twitter, and I think LinkedIn and Twitch and stuff like that. But YouTube channel is the best place to find me. Leave me a comment. Lots of free education out there on my YouTube channel. If you want to direct message me on Instagram, you can do that. You can follow me on Instagram at pulver.chris or Twitter at pulverchris. Okay. This is a playlist I'll finally start this week. I intended on getting some videos done last week, but I was under the weather and did not talk at all last week. So that was rough. Anyway, look for the A to Z trading indicators rollout this week. It's going to be a new playlist on my YouTube channel. Again, that's youtube.com/Chris Pulver. All right, let's get to it. Okay, so we'll take a look at the major indices this morning. It is 9:30 opening bell. We are looking at price right at these highs. Okay, so we have the S&P or the SPY opening up at 394 and change. We have the Dow Jones, which is way outperforming. Look at this run from the Dow. The old DIA. In fact, we are, let's go 9 points above the high. So 9 divided by 320. We are nearly 3% above the highs on the Dow Jones. Crazy, right? Now, I am wondering, is this last little move is this the capitulation move on the Dow before we start to see some tops and coming to balance back in towards these previous trend lines? Or is the Dow just going to keep outperforming? Not sure yet. So continue to watch this closely. It's interesting to see that the structure has blown up a little bit. So we talked about this, wasn't last week, but the week before. If we take a zoom out on the DIA, look at the weekly chart for a second here, and we take a look at this, potential broadening formation. Look at last week's candle, right? Last week's candle is a big blowout candle. So I mean, I see that there is a quite an obvious inefficiency to it. So I'm not saying that I'm going to turn around and short the Dow Jones, but this is what we mentioned. If you connect the recent highs right here, okay, going into that consolidation structure from last year, this could be where there are some heavy profits to be taken up towards these levels. The one thing we have to keep watching in the U.S. markets is the 10-year note, which has not really backed down much. Right, look at this, the 10-year note, 10-year yield is at 1.61. This is continuing to be the signal to see whether or not, if this keeps trickling higher, stocks are going to have a hard time going higher. So I think in order for us to see a healthy continuation to the upside on stocks, this 10-year note, TNX, has to start dropping back down. All right. If it drifts higher, expect stocks to see more volatility, maybe some concern ahead as inflation rally or inflation concerns start to increase. All right. Now, from our double bottom here at 0.50, we rallied up to 1.6. That is a lot of recovery on the 10-year note without having some type of pullback. So I would imagine that we do end up settling back down in here, okay, establishing some type of higher low. And in the next probably 6 to 12 months, we will see higher rates. We will see some inflation concerns. We will see some more activity from the Fed. Um, it would kind of get in that the conversation. The narrative would be overheating. We would be overheating the economy if the rates continue to go up or the yields continue to go up. It would look at I think that the Fed would be expected to possibly be raising rates. It would cause a lot of concern for the stock market. We would see heightened volatility, maybe some sell-offs at these historical highs. So NASDAQ has been fighting back. So the Dow Jones has been outperforming. The NASDAQ is fighting back. But let's take a look at this one on the daily chart. Okay, so here is the QQQ, the ETF that follows the NASDAQ. Again, highs from here, we had about a 12% sell-off on the NASDAQ. Okay, so 12%, we got into that correction territory, past resistance becoming future support. There's some opportunities to buy some tech stocks last week. Good volatility in a lot of the stocks that did come back to reasonable pullback levels. Do I think that the NASDAQ is going to come back and make new highs? Not necessarily. I think what's going to be interesting is right in here. This high around 321 on the QQQ. If we come back up to 321, this is either a rejection point where these, again, sell the rally, right? If this is retracing, you sell the rally right around 321, or this is a level where the bulls will hold price, consolidate, and then make one more push to the upside, trying to regain those highs once again. Now, sentiment is going to have to be quite strong for the NASDAQ to fight back from a 12% correction into, new highs once again, right? I still stand by this opinion. It's a bull market. Everything in the markets right now are supporting, buying in the short term, staying bullish in the short term, remaining bullish in the short term, and I will continue to do that. I did take a look at some of my positions here on some of my EV stocks, actually doing pretty well. Nikola is up quite a bit. Let's see, LAC, lithium. Let's see, these are the stocks here. So little EV plays. I have NKLA. I picked up on some limit buys last week. This was NKLA around $15. I bought that last week or a couple weeks ago. LAC is another one. This is Lithium Americas Corp. This is a limit buy around decent levels. Let's see, limit buy around $17. So this is a buy trade around $17, which was past resistance. I should have just bought it right there at the pocket. That would have been a nice fill at $14 at LAC. Anyway, I'm at 17. GNW. This is a SPAC play. I bought this one around $6. No. Nope, $3 and yeah, $3 even. So I bought this one at $3 even. This was not too long ago, a couple months ago. NIO, this is the kind of the equivalent of Tesla, but in China. So I bought this one at the yearly pivot around $35. So NIO around the yearly pivot. I was a little disappointed that Tesla didn't find the yearly pivot. I was looking at limit buys around $500 on Tesla. We came down to lows around $540. I don't think Tesla's done yet necessarily. Having this recent low established, high to low here, I would not be surprised if we see high to low, a pullback in Tesla, maybe one more push to the downside to cross over find this previous resistance, find this yearly pivot. Let's form some lows, between $500 and $400 on Tesla. That's a great spot to me. For me, I'm going to stay long on Tesla around that $500 area. So NIO did find the yearly pivot. Tesla did not. One thing you can look at is yearly pivots, especially in stocks. Okay, yearly pivots. How many stocks have hit the 2021 yearly pivot? Because given the rallies we saw in a lot of 2020, once we had our bottoms in March and we had rallies from there, how many lows to highs, and you come into this year's trading, how many yearly pivots do we have sitting like this? Where we have previous resistance becoming support, nice little balance level, equilibrium on these yearly pivots. To me, is a really kind of blanket message out there. The way I'm looking to trade a lot of stocks, if I want to buy and invest and hold more long term, I'm looking for big levels around these yearly pivots. So all that is last year's low plus the high plus the close. And that calculation, you take the average of those, that gives you the calculated yearly pivot. In most of your charting platforms, there's also a pivot indicator. If you have the ability to change it from a daily to a weekly to a monthly to even a yearly, just make sure you load enough bars of memory so you can calculate that properly. But you should be able to see where these yearly pivots are sitting. So there's also yearly pivots in stocks. There's yearly pivots in cryptocurrencies. So if we take a look at Bitcoin, for example, into cryptos. So Bitcoin, get this one out of the way here. Bitcoin is at, like I said, we crossed $60,000. We're at 61.6. Wow, for the weekend, and we dropped about 10% from there. So still seeing this push higher, which is amazing. It again, it causes a little bit of concern. It's like this high, this high. We're making higher highs in price, higher lows in price. The one thing that continues to kind of keep me on the sidelines as far as I'm not adding more to Bitcoin right now. This is the yearly pivot I was talking about. The Bitcoin yearly pivot is at $20,500. So I mean, do I think that we can find it this year? I do. And the one concern I have as far as why would this keep going higher would be because we have a complete disagreement with momentum and we've been sitting at overbought conditions on multiple time frames. So look, I'm not complaining that Bitcoin's going higher. In fact, I'm actually happy that it is. But I wouldn't be surprised if this ends up happening. Okay, something like this. We could have some type of rising wedge getting built up on Bitcoin, where we have, the push just keeps happening. More and more money keeps coming in at these highs, and then we'll have a pretty decent correction. Okay, I mean, it's like we might have some blow off move to the 100K mark. I would be really interested in taking profits if that happens, just because I feel like that's gonna end badly. I think the sharper that cryptos go to the upside, the sharper they're gonna come down. And just like we saw back in 2018, we can see like 80 to 90% of the value erode, right? I mean, going from 3,000 to 20,000 in 2018, we saw it go from 20,000 back down to 3,000 again. So I mean, you can wipe away a lot of that value. Just because Bitcoin right now is at $56,000 does not mean it has to go up and never come back. We can go up to 100 grand and drop all the way back to 20,000. We can stay at current prices and stay elevated as the cost of mining goes up. We could pull back and have a correction back into these previous support levels and resistance levels. So just saying, this is a good area to be watching. I certainly hope that it keeps plugging away to the upside, but if we get closer to this, I mean, I'm just going to say this right now. If we get to 100K on Bitcoin and that drags other altcoins with it, it's going to be very difficult to not take or protect a decent amount of profit and start converting some of that crypto profit into cash, simply because I think we can, take some of that back very quickly. So on the other side of that, let's say that this high and this high were in fact forming some type of rising wedge, and this ends up falling back down. Well, be ready for that. That's all I'm saying. Like, be ready for this area. Yearly pivots on stocks, on Forex pairs, on cryptocurrencies. These yearly pivots are essentially the market's way of finding equilibrium from year to year. So if you have a movement from low to high, okay, the yearly pivot typically is a balance point. If you have a high to low, the yearly pivot is typically a balance point. Same thing happens on daily levels, weekly levels, and monthly levels. All right. So do they always have to be found? No. And case in point, we were in a currency pair not too long ago, the Euro Swiss, And this is a yearly pivot right here. That's 2020's yearly pivot on the Euro Swiss. Now, there was a reason that as this was going lower, in my trading room, in my personal trading, I was building up positions to stay long on the Euro Swiss because I believe that these yearly pivots get hit. And so what do you see? We saw a nice low. We saw a falling wedge. We built some positions off of here. We had a rally. It took a while to correct, and then we finally had a breakout, right? So you can see that, it set up where we have a lot of levels to fill at the lows. We have all this, profit target destination to the upside. We have a lot of opportunity, provided that price finds a way to hit these pivot levels. And we started trading right here in consolidation, right? We started this year in 2021 at the yearly pivot at 1.0750, and we actually rallied just recently within the last couple of weeks. We rallied very aggressively right up to fill that yearly pivot in 2020. So it works, and pivots get all the time. So you find the right, technical markets, you find the right balances. Same thing here. This is 2019's pivot. Price is right at it. It never broke above it. So resistance becomes an available target, becomes a bounce of support. So it's just good technical structure. Okay. In fact, I'm sure I have some students out there that are going to ask, like, hey, can you do more on pivots? Probably would be a really good keep it seriously simple video series to just do a lesson specifically on pivots. I've traded them for a long time, and they're awesome, and they still are awesome. And it's also in all, multiple markets. Okay. All right. So let's see here. Let's take a look at FANG stocks for a second. So Facebook 273. Amazon and Apple. Let's go Amazon, Apple. Apple's at 121. I've got levels to buy Apple around $100. So yearly pivot again, just around $109, $108. Look at this pocket level, this little island gap around $100. I love Apple at $100. Okay. What I wouldn't be surprised to see on a lot of tech stocks, especially, is keep in mind that we were led by tech last year, and this year tech is kind of leading the correction. So I think that the tech sector, that led the markets last year, that kind of dragged everything up with it, that forced a lot of concentration into a very small amount of stocks. I think that what we might end up dealing with is something like this. Maybe these great companies like Apple, like Amazon, like Microsoft, we may not necessarily break the highs anytime soon, but I think that we can also build positions off of these. I for one would like to be in Apple at $100. If we go back up to $30 to $40 or 130 to 140, take a 30 to 40% chunk of profit, and peel some of that off. If I put, let's say I put another $5,000 into Apple at $100, right, and it goes up to 140, I can take that position that I added, take some profit, and then if it comes back down, I can add more, take some profit. We might have to become traders for once. And we could probably make more money trading these markets and trading some of these big levels as opposed to seeing the type of growth and gains and just nonstop bullishness like we saw last year. Do I think that 2020's trajectory is going to continue this year? Probably not. Okay, I think that this is kind of the afterburners were kicked in last year. The turbo boosters were in last year. All the forward guidance and optimism and pricing in stimulus and all the stuff that we're seeing right now. I think now it's like we're getting the drift, right? We're getting the drift, and there's nothing really to turn it against itself. It's not really there's no bearish catalyst necessarily, but I think it's kind of the afterburners. It's like the drift is on, the continuation is there. It's hard to really derail the current market. But I don't think we're going to get this just unbelievable, like everything that either makes money, doesn't make money. If you just have a stock, if you have a SPAC, if you have an IPO, you're just making money like you did last year. It's probably not going to be the same. So, as I've said for most of this year, know the companies you want to buy, know the companies you want to own, know the companies you want to invest in, and really build that strong portfolio. I would be fine if I took, let's say a portfolio of 10 positions, 10 companies. I know that's really small, but 10 companies, and all I did was took a lot of partial profits. Like, I'll just throw this as a hypothetical for today, and we'll go into more charts here in a second. If all I did for the next, let's say, 2 years to 5 years is if Apple was volatile enough to come back down to $100 and it returned back to 140 and I took profit, and if it came back down to 100 and I bought it again and it went back to 140 and I took profit, and it came back down to 100 and I bought it again, and it came back to 1, could I make money doing that? Right? If you think about these historical highs in these stocks, if we're gonna have a hard time making these big bullish runs, then think of big levels. I mean, a 20, 30, 40% chunk is pretty darn good. Okay, if you still have some value stocks out there, if you're still using stock screeners, Finviz, for example, let's go Finviz. I know I'm jumping around here, but if you're using a stock screener and you're looking for value stocks at a certain price point, so if I just did all and I'm looking at price levels, anything, let's say anything under like 20 bucks. Well, how many stocks can I find under 20 bucks? Probably a lot. Can I find any decent stocks? Can I find, analyst, see below target price if it's below price? So under $20, below analyst price targets. I mean, we've got 400 stocks we could take a close look at, right? You want to add some more stuff to it. Are we recently off the highs? I mean, there's all sorts of ways to filter out some really nice stocks. Okay. So anyway, we'll talk more about that on Friday. I actually have another screener I was going to show everybody on Friday, since we're back in action. Yeah, exactly. That's a good point. Yeah, Denise said it there. More money than if you just buy and hold for sure. And that's and look, and I could be totally wrong. Like I could be thinking that okay, if I bought it here and I don't take profit, well, then I'm obviously at some point just going to build up this big position on Apple, and I would hope that Apple, ends up going higher, right? And over the course of even after, I don't know how many splits Apple's had over the course of the last 20, 30 years, but probably a lot. Last year was a 4-to-1 split. So do I think Apple could somehow return to a $200 stock again, a $300, $400, $500 stock again before they split? Yeah, I do. But I think that if we have levels like this and we buy, take profit, buy at equal lows, take profit, buy at equal lows, take profit. Look, I'm not saying take all of your profits. This is what I would do. This is what I'm going to do. Okay, if I have, let's say I have $10,000 in Apple. I'm just throwing this out there hypothetically. Okay, so let's say I have 10K in Apple, right? I have 10K in Apple. All right. So if I have $10,000 in Apple and I'm willing to throw another $1,000 in at $100, so I'll throw another at $100 per share, I'm going to buy $1,000 more. Okay, so I'm willing to buy $1,000 more. Now, if my $1,000 here jumps up and becomes, $1,400, could I just take the profit? Could I take my $400 of profit and put it back in at a better price? Sure. So, I mean, I could turn some profit on that little position. I can turn some profit on partial shares. And, I guess you'd have to, it's like if you had the crystal ball and you know that Apple's going to ultimately be $500, then you would hold it forever. But I also like the idea of, let's say the next 12 to 24 months, Apple doesn't make any new highs. The only way that I'm going to make money on Apple is by taking profit at higher prices. Okay, Apple is not a dividend stock. Apple is a extremely profitable company with a trillion plus market cap that everybody in their portfolio is holding. Every fixed income portfolio is holding. There's tons of concentration in Apple. But if you want to make money on Apple, you probably have to learn how to trade it. So we had a 4-to-1 split. We have highs right around $140, but there could be levels that we could buy for profit. Same thing on Amazon. We talked about this a couple weeks ago. Okay, Amazon. Amazon was a big reason that stocks were very bullish last year. E-commerce, market share. Amazon is untouchable, right? Granted, they're dealing with some union issues right now, and that's not going to go away. But do you think Amazon's going to stop making money? No. Same thing. Look at these levels. Yearly pivot is just around $2,800. We have highs around $3,400. These are not small movements, right? Like $600 out of a $2,800 base. You're talking about a 20% chunk of profit or 20% on your position. So if I did, $10,000 in Amazon, I took another, $1,000 here. Could I turn that into some profit? Sure. Add another position, turn it into profit. Add another position, turn it into profit. You can still trade ranges. So, long story short, here's my thoughts. Trajectory that we saw in 2020 is probably not going to be repeated. All right, so let me type this up and we'll go into some currency pairs and some other stuff. So again, this is just my opinion. 2020 stocks. It was rocket ship prices, decade worth of opportunity. Buying the dip, buying the pullback, buying the corrections, the percentages we saw last year going into bear market territory happened so fast. The V bottoms, the double bottoms, the COVID lows, all that stuff happened so fast. Okay. So everything was moving bullish. Even if the company stock was Worthless. Okay. How many borderline bankrupt companies last year still had a stock price that went up? Hertz, J.C. Penney. Look at GameStop. Look at these squeezes. This is still happening. But in 2021, this is the continuation. Okay. This is the drift. This is the let's see, I think drifting is the best phrase. The drifting. There is no bearish catalyst. The only concern is 10-year yield. 10-year yield and Fed raising rates. Not happening yet. Okay, the Fed is going to continue to stay with the narrative. Okay, if they are going to stick to these really simple data points, which is employment has to be really high, inflation levels have to be somewhat controlled, they're going to keep rates super, super low. Now, we can see things drift up in the short term. We can see some temporary setbacks where there's going to be some concerns and volatility as the 10-year notes rally and continue to rally. But this is continuation. Without a bearish catalyst, without just some type of implosion in the economies, I don't see us having like this big correction. Again, you can make all these arguments and say like the U.S. debt cycle is ridiculous. The global debt cycle is ridiculous. It's all going to look. That could take years, you know. So rather than calling the top and rather than being the canary in the coal mine, right now in the short term, you can be bullish. You can participate in this current environment. You can make a lot of good short-term profits, right? You can still be positioned for long-term success. You can still be positioned with companies that have good, competitive advantages, companies that do make profits, companies that metric-wise are something you would buy on paper all day long versus speculation versus looking for cheap stocks you think are just going to be something that pops. That was last year. Okay, this year is about building value, in my opinion. This year is about building strong companies, strong growth, and holding for the next 3 to 5 years. I'm definitely more of a long-term outlook going into 2021 and beyond. So, all right, levels that I like in 2021. Levels that I like in 2021. Yearly pivot levels for balance and buy the dip. Okay, potential ranges to buy low and reinvest at great levels. So buying on sale, but not necessarily looking to hold forever. If I just build a position up more and more and more and didn't take any profit on it, if this goes sideways for the next, let's say 12 months, I'm really not making any money on that. Okay, if you want to turn profits, you're going to have to actually consider taking some profits at levels, with some growth opportunities. So that's all. I think that right now we'll probably see, the Dow Jones and the S&P maybe outperform the Nasdaq. So far, that's the case. I still think there's going to be some decent volatility pops to the upside. Volatility is higher, still holding highs around $20, but we can't quite crack that $35 mark. We can't quite crack $40 on the VIX. Okay, so it's just a different mindset. That's all. I think that if everyone is very much focused on tech sector this year, you're going to probably see some ranges to trade. Tech probably grew to an overvalued condition last year. So I think that tech stocks, if you like them, look for ranges. If you like them, look for great levels to buy. I'm not going to be afraid to take profits on highs. Okay, I'm not going to be afraid to be willing to get back in at good prices, but I think that tech has a long ways to fall. I think there's going to be more volatility on tech than anything else. All right, let's take a look at the volatility index. Let's get into some currency pairs, and then we'll keep going. We haven't been going that long today. Okay, so here's the volatility index. We're at 21.20. I'm still holding long a couple of ETFs that are in favor of higher volatility. So I'm holding the VIXY, the VXX, and it just keeps holding here. Pops up for a day, comes back down, stays solid, stays sideways, stays pretty dormant, and then pops up again, comes back down, pops up again, comes back down. You know, eventually, do I think we have a bigger scare than that? Sure. I mean, we could probably come up here to the yearly pivot right around $40. That's all I'm really looking for these as well. So the VIXY, we're at $11.30. So I think that this could end up, just look at the timing factor. Okay, so we already have the monthly pivot drawn out. If I zoom in here, this is my March monthly pivot that you can see on my screen. So if I block this in, this is the first trading week of March, and this is where the end of the month is going to occur. So if we get through March, okay, let's say that this structure right here holds in this current environment. If we did nothing more than just kind of hang out at these recent lows and we get into April's trading, do you think that April and May could provide some surprise to the upside just based on this technical trendline break? I mean, I think it's possible, right? So we have a lot of support over here in 2020. We could hold these lows again back in 2020. We could spend some time here in April and May on the right-hand side of the trend line and actually see volatility increase quite a bit. So that's not a bad thing. I mean, increase in volatility is a good thing for traders. Okay, I mean, if you're a trader that likes day trading opportunities, short trading opportunities, the ability to trade solid price action day to day, go after some decent gains throughout your trading week, volatility is a good thing. What does this mean for the stock market? Well, if the volatility index starts to go up and these volatility ETFs go up with it, then the stock market is going to overall drop. So how far? I don't know. I mean, it's not necessarily proportionate. If this goes from $11 to $30, that's a huge increase, right? That's a huge increase. But does that mean that the overall stock market is going to drop that much? If you go 20, let's say $20 on an $11 position, I mean, you're 180% in volatility. But does that mean that the stock market is going to drop that much? Probably not. We could probably have a 8 to 10% correction on the major indices, maybe get into that 10% correction territory. But as long as, and this is what's going to be important to kind of make one of those notes, as long as corrections remain less than 20%, we are not in bear market territory. So corrections can be 1 to 3%. They can be 5 to 10%. That's what the Qs crossed last week. We had 12% on the NASDAQ before we started to see those dips. So we can have a lot of correction percentages. Okay, but it's when you get those death crosses of the 50 and the 200 moving averages. It's when you get the 20+% sell off from the highs. That's when all of a sudden you start talking about the bear markets. But we're not there yet. We're not even close. And I don't think that catalyst is coming anytime soon. So short term, stay bullish. I'm going to stay bullish. Okay. All right. But I still like the instruments. I'm still long VIXY. I'm still long VXX. And I'm watching those carefully. I've got chart alarms set all the time. I think there's really good structure. As long as this support ends up holding, then we'll have to spend some time. I think I'm just going to kind of tolerate getting through the month of March. And then in April and May, we look to see if we pick up some volatility, right? If this is nothing more than breaking a trend line, and then we're breaking a trend line over here in April and May, let's see what volatility gives us and be prepared for a potential sell-off in April and May. What does that translate into in the Forex market? Well, if we start to see volatility increasing in April and May, if this is any technical indicator, all right, and we would look at some risk-off trading in the Forex market, then we can look really simply at the dollar index. So we can look at the dollar index, and we could see this risk-off tone allow the dollar to come back up to this yearly pivot. Past support, previous highs, fourth wave high, yearly pivot, 12,100 points on the US dollar index. This would be the continuation. So we just recently took out a high here. We could be on the left or the right side of the trend line with all of the clearance to continue to go higher. I think this is a big level to run on the dollar. I think the dollar has freedom. Okay, I think the dollar has freedom to run into this area. This is what I've told everyone in my flex trading room. This is where I'm looking for the dollar to go. Between 12,000 and 12,100, those are my profit levels on the dollar in the near term. Okay, now could we have something bigger than that? Sure. We could have something much bigger on the dollar index. We could have the dollar index literally hold this low, and come all the way back up to the high. That is no joke, all right? But take it one step at a time. I think right now, because we're building off the lows, the dollar has room to come back into this area here. Yes, yearly pivot looks great. If we come back into the midpoint, we come back into previous resistance, then we're going to have to notice that it's just going to continue going higher. So we can take that in phases. But I think for right now, because we're just off the lows, I'm still looking to build positions off of dollar strength. Okay, some currency pairs have provided some really nice opportunities. Some pairs are still a little bit slow and lagging. So pairs like dollar CAD's at 24.92. I am still very much excited about dollar CAD to go to the upside. Okay, has it done it yet? Not yet, but it's getting there. So I just, again, stay patient on the dollar CAD. If you're long with me on dollar CAD, we should have been spacing our trades out from these lows to these lows. Couple of small positions in. I'm looking at building more positions here. I'm looking at adding to winning positions here. With more confirmation, dollar CAD's going to be a trade we can build up into some bigger profits. Okay. David asked a good question. Other than rising rates, what would make the dollar go up as much? So that's the thing, David, is rising rates. It's not necessarily the rising rates that's making the dollar go up. I think what it is you have in the background you have yes, you have rising rates. You have some uncertainty around what the Fed is going to do. You had a lot of weakness that was already priced in on the dollar ahead of time, and so this is in a sense like a correction, a relief rally, a squeeze against the dollar. Also, if you think about, why would the dollar get stronger? Look, you have a lot of extra money that is going to find its way into the system. Okay, now in the US, we just rolled out another $1.9 trillion stimulus package. Now, I understand, now, not all of that money is going into the financial markets, right? But if you give a family a check for $1,400 or a check for, $1,400 per adult plus their per kid, I guess. I mean, you could have families that have up to like $8, $10, $12,000 excess from this stimulus package. If those families want to all of a sudden invest that is a lot of money that just gets pumped right back into financial markets. We can still see, growth in the financial markets. We can still see that dollars are going to work for people, right? And so with yields on the rise, the correlation is usually the yields on the rise are a leading indicator for the dollar. So I don't see with the 10-year note, especially on the increase with a bullish trajectory, I don't see that weakening the dollar in the near term. And I think that with this new inflow of money, inflow of capital into the USD denomination to grow and fund projects and fund risk appetite, same thing we saw happen with the Swiss franc and the euro. I mean, we saw the Swiss get very weak all of a sudden. But if we have any ounce of risk off trading, the Swiss gets back to strong. So does the JPY, and so does the dollar. So it's really tricky because like it's not always like super black and white, right? It's not super easy to see like, okay, this is risk on trading, this is risk off trading, and it's always this way. There's always going to be some broken correlations, and we certainly noticed that last year. So you're right. I mean, the dollar is gaining some strength because of rising rates, but I also think because there's an overcrowded short trade on the dollar. We saw like net positions were super 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 short against the U.S. dollar, so it's a necessary correction. It's an overcrowded trade. It's probably more profitable to be taking profit at current levels with the softer dollar than it is to be continuing to sell the dollar. I think if there truly is a long-term plan to sell the dollar and see further dollar weakness, I think that dollar weakness is going to come from a relief rally first. Okay, so if we go back to that dollar index chart, I think even if we come back into this past support or this yearly pivot, this is the relief rally first that kind of uncrowds the dollar. Now, if there's more interest to take the dollar shorter, then I think we come back into this area, we see the bears step back up and say, okay, look, we're really going to take this dollar lower. And then we see another leg. But like I said, this could be nothing more than support here, this is resistance, and this was a bit of an anomaly because of last year's volatility during COVID, right? And so we could see the dollar become a complete reversal. And you know what? At this time, like I don't have the answer for why would the dollar get stronger? Why would the dollar stay this strong? I don't know. But it would make the dollar look more attractive than others. You know what else makes the dollar get stronger? Let's say that the Fed all of a sudden starts noticing that job data gets better. Inflation numbers are under control. The Fed's talking about maybe tightening, maybe scaling back some of those mortgage-backed security purchases, right? Maybe starting to go back into tapering and tightening. Maybe not raising rates right away, but just the narrative changes. Those are all things that, again, the market will price these things in. So we could see, the dollar getting super weak like it was last year, pricing in a lot of stimulus, pricing in more weakness, pricing in more of the dovishness from the Fed, and all of a sudden that little bit of narrative changes, and all of a sudden the dollar gets priced in very differently because and it's a roller coaster ride. It's like dollar weakness gets priced in, dollar strength could get priced in, and all we're doing on the sidelines is trying to figure out how do we trade it. So, do I trade based on the Fed? No. I trade based on the technicals. And I've said this probably more in the last month than I have in a long time because there's so much garbage out there to filter through. There's so much news out there that we try to grasp onto and think like, how's this going to help me trade? What do I need to tell myself to justify my positions? Stick to the charts, stick to the technicals, make good decisions. Use good equity management. That's how you trade. So whatever happens with the dollar, it's going to unfold in the charts, and we'll probably be better traders because of it versus trying to, keep tabs in the Fed and watch every statement that Jerome Powell comes out with and watch every FOMC meeting minutes. It's just noise. I mean, it really is. The price is going to do whatever it wants. Non-farm payroll, FOMC, all these major dollar announcements. We could have mixed news. We could have bullish or bearish news. Doesn't necessarily mean anything. Just keep watching price. Keep watching price. Keep watching good levels. If I'm trading the dollar right now, the pairs I think have a lot of good potential still is the dollar CAD. Okay, the dollar CAD has not really made a move at all. So I'm looking for this one to kind of allow us to build off these lows and see the dollar CAD get some rounded out moves coming back up into 1.30 and 1.3350. To me, I'm going to try to take every opportunity I can with confirmation, on the right side of this trend line here from, let's say, 127. From 127 to 130, I'm going to be very aggressive and bullish. Okay, do I think we can go from 127 to potentially 133? Yes, and if I can, I want to be very aggressive on that as well. Notice there's a yearly pivot. Notice there's past support. Notice there's previous highs. I mean, the bulls could definitely make a relief rally, have a three-wave correction, 1, 2, 3-wave correction into this area, take profit. We can turn, from 2,500 to let's say 2,500 to 3,000. We can find a way to be profitable within 500 pips. If we knew with a fair degree of certainty here that we're going to get a 500 plus pip move that's bullish on the dollar CAD, do you think you could turn profit? I think you could. I think a lot of traders can. Okay, so that's what I'm looking for. We did the same thing, dollar Swiss. Now this one's already kind of played out. Okay, this one we've been waiting for. Had some nice trend line breaks on the dollar Swiss. Same thing. I would love to see the dollar Swiss do this. We broke the high. We're now on the right-hand side of the trend line. If this is going to be a larger reversal pattern, I want to pull back on this dollar Swiss. So my next plan on the dollar Swiss is to build from 91 to 9,000 to 8,900. I'm building price in this area, building some buy levels, and I'm trying to take the dollar Swiss up higher into this high. So I would love to be, getting the dollar Swiss back up into 1.00. I would love to get a chance for this one to pause a little bit, fall back down into some better, more appealing levels, higher lows. Look for some trend line breaks, look for some falling wedges, look for some opportunities to buy higher lows and see if this can rally back up. Okay, but we had a really nice run. I mean, this low here from 8,800 all the way to 93 and change. I mean, again, that is a 500 plus pip run. Can we turn some profits with the markets moving 500 pips in our favor? I certainly hope so. Okay, how about Aussie dollar? Aussie dollar. Get rid of this fib for a second. If you had a chance to take a look at my Fibonacci and Gann keep it seriously simple video on fibs, that should hopefully help make some sense out of this trade here. Aussie dollar from this high, I think that we have what looks to be a, we could be looking at a head and shoulders like so. Left shoulder, head to neckline. We could be getting some more noise on the right-hand side over here. But I think if and when this breaks this neckline, so if and when let's say we close below 7,600, if we close below 7,600, we should be looking for Aussie dollar to come back down. There's a monthly target right there. There's a yearly pivot right there. Like all these fantastic levels to the downside in Aussie dollar. Okay, this is what we have to look for too. It may be a little bit more difficult. Maybe this is our left shoulder, head to neckline, gets a little bit crowded here, goes up one more time, retests the highs. But it still comes back down, does the same thing, becomes a double top, and then we calculate the double top, still comes back down to this monthly pivot, still comes back down to this yearly pivot. Okay, overall, I mean, look at this move on the Aussie dollar. If you are a trader in general, I don't care what market you trade. If you trade cryptos or stocks or whatever, If you can equally buy and sell and you feel like this is a fairly balanced market, if you have a low and you have a high, would it make sense that at some point this market's going to find a way to balance? If the market moves in waves, it would make sense that from this low to this high, the market's going to have to find some type of time over here to find some equilibrium. Yes or no? So if this is a low, this is a high, this is where I think is fair market value for the Aussie dollar. Okay, are we at fair market value right now? No. So could we stretch a little bit further? Could we stretch a little bit higher over here? Sure. And we can make a bigger extreme and we still find fair market value on the Aussie dollar. So if I were to, forecast the next 3 months, 6 months, do I think that the Aussie dollar can pull back into some decent levels? Yeah, I think we can pull back into this area around 7,400. I think we can pull back to these recent lows and yearly pivot levels around 7,000. You know, so that's all it is, and it doesn't matter that this is a forex pair. I mean, if this was a stock, I'd look at it the same way. The difference is if I was looking at this as a stock, instead of wanting to, sell the stock, maybe what I do instead is I just set chart alarms and say, okay, this is where I want to buy the stock. So that would be my plan. Is like in a currency world, I want to sell this Aussie dollar for profit, but I also want to look at buying that fair market value to buy this low high. The bulls are clearly in control on this bigger move from 2020. So this low to this high, if I bought higher lows, I can see that as a nice profitable opportunity to actually buy at a better price. But if I'm buying the Aussie dollar now at 77, I think that my upside potential is getting very, very small. All right. Whereas if I'm selling high, my profit opportunities have decent space to run. Right. So if I'm selling high, I have opportunities to make profit here. If I'm buying current levels, I'm running out of profit opportunities. So if I'm buying it down here. If I'm selling it, I'm trying to sell it up here to get it into a fair market value, and then I can start looking to buy more. Does that make sense for everybody? Yeah? Okay. So again, just kind of the overall viewpoint on some of these big runs from 2020 to now, based on the dollar index. I still think the Aussie dollar is a really good looking sell trade. I still think that the New Zealand dollar is also a really good looking sell trade. So I'm looking for this one to either continue to go a little bit lower, back down. This is our low, this is our high. This is fair market value for the New Zealand dollar around 6,600. 6,800 is previous resistance. We're currently trading at 7,200. So we have anywhere from 300 to 400 pips to the downside to find some fair market value on the New Zealand dollar. The pound US dollar. Pound US dollar is at 39.10. I've actually sold this one several times at 1.40, and I continue to take some short-term profits off of this. All I'm looking to do on this one is, try to sell this at channel highs between like 4,000 and now 4,200. And if it comes back up here, 4,000, nice resistance, falls back into channel support, I'll take some profit. If we end up breaking into this open space, okay, I'll show you that right here. If we break into this open space, look at this channel. If the pound US dollar breaks into open space below, let's say below 3,800. If we're in 3,800 or lower, I think we have room to fall on the pound US dollar. Again, that could be dollar strength, that could be pound weakness, all the above. But right now we're still holding the integrity of this channel. So if we come up to channel highs, I would look for a chance to sell that nice and high and play the channel. If we break the channel lows, then we start getting more of a correction back into the base of this channel and some nice pivot levels around 1.30. So again, it's a dollar index play, but we've had this run from, this is from 1.26 all the way to 1.43. That's a pretty decent run to the upside. And, if this channel structure breaks, I think it comes back down to balances. That's all. New Zealand dollar already did. Dollar CAD already did. Dollar Swiss already did. Dollar yen, this one actually ended up hitting the level that we wanted. I wish I was more aggressive on this one. We were long on the right side of this channel on the break at 105. I didn't do a very good job of participating aggressively in this one. I had a couple of trades in. We took some profit. I tried to get back in on some robot trades to the upside. I just didn't get as active as I wanted to be. But our destination on the dollar yen was to hit 109. It did that. I'm done with this trade. So I'm still wondering. I'm wondering if dollar yen is going to do something like this. Do we come back up into 111 or 112? Do we come back up into this structure here? This has been a very aggressive from 103 all the way to 109, pretty much a straight up move. Now, if we pause a little bit or we pull back a little bit, I could see us setting up a higher low and still having more to the upside. I think what makes this trade somewhat easier is, let's say that we come up into 110 to 112 and it just continues to do that in a very straight line. Then I think this is going to set up for a very aggressive fall. So, currencies do this quite a bit. What goes up and it does it in a very inefficient manner will end up topping and end up coming back down. So we could have this, this pop to the upside on the dollar yen and ends up finding all this major resistance and it comes all the way back down. So I'm just going to take this one like one step at a time. I don't have any plan on dollar yen because it's already hit my destination as a buyer. We wanted to buy it in here. We wanted to target 109. That profit's been achieved. From this point forward, I'm just going to leave it alone. Because if it keeps going and going and going and going and going, that's fine. But we'll wait for a trend line break and we'll look for opportunities to sell this nice and high. I think we can turn this into a nice profit eventually. We have lots of inefficiencies. We have lots of pockets that have been created. So if we sell it high enough, I think that we're going to get some really good opportunities to sell the dollar yen nice and high. And that could be other yen pairs as well. We could see the Aussie yen sell off, which I thought from a couple weeks ago the Aussie yen would still be setting up a really good opportunity here. And it still is. We're holding this current high on the Aussie yen. Could we end up breaking the right side of the trend line once again, taking out this low and still correcting on Aussie yen? So I'm watching. I'm watching a lot of currency pairs as always. Okay. Let's see here. Analyze the pound yen. Sure, let's take a look at the pound yen. If you have any specific ones you want me to go through, we can. Let's go for. We'll wrap up here in another like 5 or 10 minutes. I don't want to go too much longer than an hour. Okay, pound yen is at 151.80. This is another currency pair that I think if you just give it some time, let's take a look at my technicals here, right? So do we have some higher highs in price? Yes. Do we have lower highs in momentum? Yes. Do we have overbought conditions? Yes. So just at a glance, okay, the pound yen is overbought and it is extremely divergent, which is good. So that means that in due time, I would expect a top to be forming. Now, we did have a near-term top at the end of February when we had some pretty massive shakeouts there. Again, I mean, without making this overly complicated, just stay patient and keep the trade sizes small, but I would just look at something like this. Doesn't have to be very complicated, right? I mean, you connect this low to this low to these lows to these lows. Look, if price gets on the right-hand side of this trend line, chances are we're going to gravitate to this other trend line, and we have a monthly pivot there, a weekly pivot there. We have pockets right here. Look, we could fall from current prices this high in price, this high in price, this high in price with disagreement and overbought conditions. All we have to do is turn the corner on the pound yen, start getting back below 151, and from there we don't overtake the highs, and we just start breaking trend lines, and we start to ignite this move to the downside. So could this be fueled by a weaker pound? Possibly. Could this be fueled by a stronger Japanese yen with some risk-off trading? Possibly. I don't know. But I would just look for some trend lines to break. Okay. All right. Dollar krone. Sure. Take a look at dollar krone. 8.47. I'm still hanging on to this old dollar krone. 8.63 is my entry. And this one is very similar to the dollar CAD. So if dollar CAD can get a move to the upside, I think dollar krone's going to go right with it. They're both, kind of heavily influenced with oil. We have this high in price, this high in price. If this is setting up some type of head and shoulders pattern on the right-hand side of the trend line, looking for a neckline to break. If we break a neckline, I think we have some good continuation to the upside in dollar krone. I would really love to see dollar krone get here. Dollar krone, we have a monthly pivot right there around 9.1. And if we can come up into these previous highs, that's around 9.6. So we can start this trade off like so. I think if this is a head and shoulders, okay, let's make sure that number one, we're not taking out this low. So as long as that low stays valid, we're going to be good. Okay, step two is let's see if we can break this neckline. If we break the neckline, we start heading higher, then we're going to take our 8.6 into 9,000. That's a 4,000 pip profit. So we can be nicely profitable on this one. My question is, are we going to take profit here? Okay, at 9.0, or we're going to try to let this run a little bit higher. There is a yearly pivot. There's also previous levels. We'll watch the dollar index. Okay, but I like the dollar krone. I still like the technical trade. I really do. I think this one's going to be a trade that probably squeezes pretty aggressively. When it's ready to go, it's probably going to go 5 to 10,000 pips. and not really look back much. Like it's just going to go and it's going to be something we can make some nice profit on. Okay. Somebody said something about the we still have a daily harmonic on the yep. So there's still a bullish harmonic on it. Great. Yep. If we still have a harmonic on it, that's great. So if it's a bullish harmonic, good pattern to trade. I like it. What was the other one? I was just thinking of dollar, krone, oil. I was going to go U.S. oil. Oil is at $64.70. Okay, $64.70. I'm going to put in a trend line right in here off these inner lows and just kind of wait it out. Okay, again, if I talked about oil and fair market value, given this recent structure, we went from literally zero. Okay, we had this amazing recovery with nothing more than a pause right here. So I would say that if you're going to give it fair market value, oil's fair market value is somewhere in here. Oil's fair market value is somewhere in here. Okay, and unless the technicals are broken. Now, again, we know that oil can be jawbone. We know that oil can be manipulated. We know that OPEC says certain things, and supply and demand is a big factor with oil. But does oil deserve to be, 80, 90, $100 a barrel? No, it doesn't. It doesn't deserve to be that way. As far as like inventory that just sits in these rigs and just collects between OPEC, just saying, hey, we're intentionally going to cut production to keep our oil prices stable and high. The demand for oil is decreasing. I know that we're starting to get back to normal. I know that TSA screenings are higher. I know that people are willing to travel again. I know that vaccines are, going all over the globe, and that's great. But are we just going to forget about 2020? Are we going to forget about oil independence? Anyway, all that aside, where do I think oil can balance? We had this really nice recovery. I think that's what this was. Crazy just pause for the moment, and we have another leg higher. Now, even if we go from 1, 2, 3, and we have a corrective wave 4 coming, if oil still has another leg higher to this level, fine. That could be our wave 5, right? But if we don't have a correction and oil just keeps drifting higher, we're still going to have to play bearish. So the way that I see oil right now is all I need to see is oil respecting this technical structure, falling back down a little bit. This is what allows my dollar CAD to be profitable. This is what my dollar krone to be profitable looks like. This is what the dollar index will give some runs on as well. I think dollar strength is also going to move based on oil a little bit. Okay. So, commodities in general, lumber prices, I've got some levels down here like lumber, copper, crazy, crazy high levels, right? Copper has pulled back off the recent highs. $730 on copper, back to $679. Lumber, look at this. Highs over $1,000, and we've dropped to $861. We're already seeing a 20% decrease in lumber. So, we're seeing some, especially commodity prices, they're all over the place. Take a look at gold and silver. Okay, gold is at 1728. I know I had a lot of traders that were buying gold back here at 1690, 1685, $1,700. Getting some opportunities to stay long on gold and look at some nice levels to buy. Silver, I still think is a range. Watch the high, watch the low. I'm buying more silver at $22. This could be another, commodity-based pair. You buy it at 22, you take profit at 29. Over and over again. If it's going to stay like this for a while, if I bought it at 22, take profit at 29. I bought it at, let's say if it comes back down to $15, goes back up to 29, I will buy range levels on silver. Okay, my concern with gold is that gold has potentially this entire channel to the downside. This is my concern. Highs right here, lows right here. We might be very interested in gold, but we could see this channel play out the entire time, and we could have gold just come all the way back down to these lows. So I'm not saying that's going to happen, but structurally, like, why would gold have to go to 2,200? Why would gold have to go to 2,500? Why would gold have to get to new highs? Because we'd have to have a distrust in the paper monetary system. We'd have to have inflation measurements, but in a way, cryptocurrencies are kind of helping offset some of that inflation worry. Or as a hedge, it's like an inflation hedge. There's a lot more growth opportunities in cryptos right now, provided that they're moving to the upside and not, bubbling. But I guess that's my concern, is that I think cryptocurrencies have taken a little bit of the excitement and the inflation safety out of gold, out of trading gold. So I don't know, we'll see. But I think that still good levels on gold. $1,700, 1365 level 1, level 2. If gold ever came back down to $1,000 again, I would buy the just living snot out of it. You buy it low, eventually we come back up to $2,000 and you take a lot of profit. Silver could be the same thing, just on a smaller scale. So always something to look at. Okay, Aussie Swiss, sure, I'll take a couple more and then I'm going to wrap things up for the video or recording. Okay, Aussie Swiss, we're at 7182. Now, the last couple of weeks, we've had to be pretty careful on these Swiss pairs, right? We've noticed that the Swiss in general has kind of it's behaved very strangely. We've seen a very weak, very intentionally weak Swiss, which was very profitable for us. We were long on CAD Swiss, long on Euro Swiss, long on Pound Swiss, long on Dollar Swiss. Um, and so what I didn't want to do is I didn't want to jump in and start shorting everything right away. Like Euro Swiss paid us very nicely, Dollar Swiss paid us very nicely, Pound Swiss paid us very nicely. They all paid us really well. When you have good chunks of profit like that, the last thing I want to do is jump right back in and start taking the complete opposite position. Let your profits run. If you closed out of your Euro Swiss like I did at 110.45 or 110.50 and it ran up to 1100 plus and I missed out some extra opportunities, fine. Doesn't mean that I turn right around and sell it, but it's like the Swiss has been pushed into weakness intentionally. There was something happening behind the scenes, something below the surface. I didn't want to just start jumping into Swiss strength. So the reason I say that is because of something like the Aussie Swiss. What does the Aussie Swiss actually resemble? Well, it looks a lot like the Aussie yen right now. Okay. Now, provided that this level holds, what we need to see happen is that this Aussie Swiss needs to stay probably as close to this resistance level without really going higher. Okay. Now, and I'm not saying that we can't go higher and then still break the right side of the trend line, but in a way, again, just like this looks very similar to that Aussie dollar. We have this low, okay? We have this pause, we have this high. Now, could we come back into this high or this high or this high? Sure. We could still drift a little bit higher on the Aussie Swiss, but I keep drawing your attention to these big technical indicators. Are we showing divergence? Yes. Are we showing overbought conditions? Yes. And so as I get ready for this higher time frame to allow these indicators to start to grip the markets, grip price, I would see that the Aussie Swiss should be running out of momentum, okay, and starting to see that there's either heavy profit taking or we're going to see a decent wave of Aussie weakness. And I know that we've been talking about Aussie weakness. We've been waiting for Aussie weakness. It really hasn't been sustainable. We've seen some short-term movement. It hasn't really been that sustainable. So if you're in Aussie Swiss and if you're in Aussie Swiss and you're short, I hope your trade size is small. I hope you're patient. I hope your break even is still fairly high. My goal would be this: if it holds this high and we spend some time on the right side of the trend line, we should see Aussie Swiss dropping back down to this area, starting to fall back into some decent levels. If we get back to this low, where this trend line starts, I would be taking profit. I'd love to say that Aussie Swiss is coming all the way back down to this yearly pivot, but if you have the ability to get this move into profit or this move into profit, be done with it. Don't sit and hold positions thinking like I've got to hold it all the way to that yearly pivot. Traders, this market could fall 300 to 400 pips in your favor, right? And then pull all the way back, go all the way down here, and you could just sit in this trade doing nothing but watching your P&L fluctuate. And it never hits your destination, or it takes longer than you want it to take. So if you are in and you're upside down and this thing gets you a chance to pay out, take your profit, or at least reduce your trade size position, or reduce your overall position, take partial profits, get back in, get some of that margin back. But don't sit in trades forever. Don't marry a position. Partial profits are a good thing. Having margin to put on good trades that are going your way with less fight, that's a good thing. Okay? So for everyone that's in my flex trade room this week, we're going to spend a lot of time. I may not go the full 2-hour sessions like we usually do Tuesday, Wednesday, Thursday. I might try to go an hour, just to make sure that I'm not going to put myself back into the hospital again if my voice is going to hold up for the week. But I want to get out a weekly outlook. I know it's been a week since we've chatted. I think last Monday was my last live session. So it was nice to be back with everybody today. I know we covered a lot of stuff in this outlook. We have a busy week ahead. Take a look at the economic calendar really quickly. So we have, it's middle of the month. We're right in the meat of March. So what do we have? We had daylight savings to shift things in the U.S. This week for See, U.S. core retail sales is coming out Tuesday. We have CPI news for Canada, oil inventories. We have a Fed funds. This is actually the next kind of the next voice of the Fed is going to be on Wednesday the 17th at 2 p.m. There's going to be a rate decision expected to stay the same. There's going to be a press conference. So what will Jerome Powell say? What's the Fed going to do? How's price going to react to that? We'll find out. We also have Aussie employment news, which will come out Wednesday night. We're going to have some. Let's see, that's the official bank rate vote for the Bank of England. So we have Bank of England this week on Thursday for rate decision. Earnings-wise this week, I don't think we have a ton of major highlights. Earnings-wise this week, I have H&M, Volkswagen, Nike, FedEx, Dollar General, BRP. So not a crazy heavy earnings week, but it's not nothing. But we're in the meat. This is pre-summer push stuff. This is spring trading is upon us. All right, but expect some good volatility ahead. I'll be really open with my positions. I mean, these are some of the trades that I'm in right now. If you want to take a quick look. So my current positions: Aussie CAD and currencies, Aussie CAD, Aussie yen, Aussie dollar, Swiss yen, Euro Aussie, Euro CAD, Euro New Zealand, New Zealand CAD, New Zealand dollar, dollar CAD. So I've got some exposure on, what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9. I've got 10 currency pairs that I'm in and positioning. Stock wise, here's my little dashboard. So stocks, I mean, between some traditional broker accounts and some retirement accounts, some other accounts, I mean, I'm in red on most of my stocks, to be honest. Like my buy levels, my 2021 levels that I've basically said, okay, here's my investment level. I'm still waiting to buy dips on a lot of stocks. I've dealt with a lot of the pullbacks that we've seen the last couple of months. The corrections, especially on tech, but I built up a little EV portfolio. I'm trying to play, I'm playing more of the long-term game right now, and just trying to buy some really strong stocks and put more money into them. All the short-term profits that were really surprising from last year, I'm looking as much as possible to take great stocks, great companies, and put money into great levels, right? So, am I as speculative as I was last year? Am I as aggressive as I was last year trading stocks? Not necessarily. I'm doing a lot more option trading for right now, like doing a lot more what is it, bull? I guess I'm doing like bullish put spreads and trading some options, but I'm just really looking to buy and hold, and I'm expecting some range opportunities. I think if I can buy low, look at levels to take profit, add more to it. There's one in particular. Actually, I'm doing this for one of my retirement accounts, a couple of my IRA accounts. I'm doing this. It is a company. It's a basically a closed-end fund. It's a mutual fund. HNDL. Oops, HNDL. Okay, this is a closed-end fund that is around a 7% dividend. All I'm doing with the stock, as you can see, I have these chart alarms here. This goes back to around 2017 to present. Now, the lowest that this has ever been was last year, and that was around $19. The highest this has ever been is around $26. So all I'm doing is I'm putting money in at these lows, and I'm trying to take some partial profits here and reinvest. So this is where I buy. This is where I take some profit. This is where I reinvest. This is where I take some partial profit. This is where I reinvest. This is where I take some partial profit. If I can build my cost of this closed-end fund as low as possible, let's say around $23. Now, do we think we come back to $20 again at some point in history? Maybe. So if I just have this for the next 5 years, doing this at some point where I'm just buying low, taking profit, buying low, taking profit. There's actually quite a few stocks out there that I'm watching that this is really my plan. Set a bunch of chart alarms, buy low. If it hits the highs, take partial profits, get back in at better prices. And I will probably sit and just have some of this overall position collecting that major dividend, reinvesting as much as possible, compounding those gains, and get back on the kind of long-term outlook. Okay, so I know we went a little bit long today, so we'll wrap it up there. So if anybody has any questions, feel free to leave a comment in the YouTube channel. Again, if you take a moment, for everyone that was watching today, I appreciate you coming in live. I know that I didn't formally announce this, but I'm back, right? So make a go of it this week. I'm looking forward to being everybody in my trading room If you take a moment before you leave or shut down the recording, if you hit that thumbs up button for me, I appreciate it. If you're watching the video, watching the recording, hit that like button for me and leave me a comment on the video. I do my best to get back to all the comments that people leave in the YouTube channel. If you are following me out there on social media, again, best way to reach me is just follow me on YouTube, youtube.com/Chris Pulver. You can also direct message me on Instagram if you follow me at pulver.chris. All right, so it's going to be a busy week. Looking forward to being back live with everybody and not being in the hospital. So I'll see you all tomorrow morning in the Flex Room, bright and early, 8 o'clock. Have a great rest of the day, and let's have a good week. Okay, talk to you soon, everybody. Take care. Bye-bye.